And then you have to make yourself anti-fragile too, so to the extent that you can. You don't want to be in a situation where you need cash, you don't have it, you can't barter, you don't have a skill, you're living in a dangerous place. Some of the stuff's going to be painful. You're going to have to make decisions you may not already want to make in terms of your job and your job location and your personal location. And
Good afternoon, everyone. Have you seen the world spin a little bit? I have. Bob Kudla with me today. Remember, trade with 2030.com or head on over to Trade Genius. We saw the world's largest cyber event, so we wanted to talk a little bit about, okay, the market open and which companies were hit, which ones had the prospect of filling in this void. There's always some winners, always some losers. And then this concept of centralization versus decentralization. Most people know it as Bitcoin or Ethereum or something, but a mass consolidation of all of our world's most vital programming under three companies, that definitely needs to either be a proof of concept for decentralization and the applications therein, or we're going to get stuck in this loop again. And then once the next time, it's going to cascade into failure. Remember these products, think about it. How do the rich invest during these times is something to think about as well, because the way they might do it would be a little bit different with all the chaos. This is one that seems to have the most money made is the chaotic times versus the stable times, within reason, of course. People are really looking for answers right now. So thanks for joining again, and the floor is yours.
Yeah, it's funny. You said that. I know you sent me some stuff over the weekend. On Friday, actually, my podcast, the Trade Genius podcast, I said the same thing. I said we've seen the most unusual market behavior that I've ever seen. Everything was down essentially, except for Bitcoin and Bitcoin-related products. And I think for the reason why you mentioned is that really it's the only decentralized asset out there, and it's also non-bank correlated. Even gold and the gold and silver miners took a hit too, because they're all tied to these centralized systems. And there's a lot of chatter about just centralization in general, that we're that reliant on very few people, that makes things very fragile. And I was worried that the Bitcoin action on Friday was actually basically a presage to something bigger, and it could still be happening. So I don't normally succumb myself to hyperbole, but I was a little bit hyperbolic on Friday, saying, hey, you watch these unusual activities, and then on Friday we had Bitcoin up, everything else down. So I'm like, whoa, what's up with that? Now Trump gets in. Trump's going to go a bit mercantilistic. He's going to go back to the 1880s, 1890s approach to the way the government has been run. And, that's the only period of time where we actually had deflation in the cost of goods, yet rising GDP for the country. And so I think he's trying to recreate that model where you enact high tariffs, you drive jobs back into the country, you'll ignite some inflation that way, definitely wage inflation. And look, I don't like any government intervention, but if you're going to intervene, that's probably the only one that will keep us from going into default anytime soon. We're going to have to take it out of the hands of the exporters and bring the jobs back into the United States. I think China is going to be totally obliterated if that gets enacted in full, because that's all they live on. And then to a lesser extent, Germany, and to the lesser extent, Japan and Korea. I think Trump will probably protect them in some way, because you need those strong allies out there in the in the Western Pacific. And then I think Mexico is going to have a tough road to hoe. I think Trump will exert a lot of leverage over the Mexican economy to get them to do the heavy lifting on this immigration stuff. That's how I see it. The rumor is if we get a market sell-off again this week down to 5,300, the Fed will cut rates in July. If not, it's almost in the bag that they're going to cut in September. And remember, people think that's a good thing. It's maybe a better thing for Main Street, but it's an awful thing for Wall Street. 100% correlation. Once you start cutting rates, you actually mark the top in the market. I think the market's trying to front run that right now. And then so Phil's my partner, for those who don't already know me, that, Phil's thinking that maybe we can inch into highs into maybe right before the election. I've been calling for an August top, and I could be wrong, and this top could have came in last week. So we're really close. Pick your poison. July, August, October, but volatility is picking up, and the world's getting a little bit crazier. And as you know, I won't repeat your stuff, Dave, on the weather and climate front, but there's some really, really nasty things. I think China's in a world of hurt right now. And then, we have the geopolitical situation in Israel. Israel bombed the oil storage facilities in, I think it's Hubeita in Yemen, but it was a signal to Iran that you only have one asset, and that's oil. And I think they bombed that just to basically send a clear message without sending a message to Iran saying, if you want to up the ante, this is how we're going to respond. We'll basically take out your oil fields. And you can imagine what that would do to the price of oil around the world. That would absolutely crush China. It would cause some issues also for India, because they take the crude and they refine it and send it off to other places. And it'll be great news for American, Canadian, South American oil fields. So anymore, it's day by day, Dave. But we're really reaching a top here. I think, we'll probably maybe go for a rotation where, inflation, we're going to basically inflationary depression environment like the 70s, where a lot of the market's going to go down. And then you're going to have certain sectors are going to go up: gold, silver, energy, Bitcoin. That's our working thesis. And then when we get buy signals from our algorithm in there, then we just take them and run with it.
And so let me ask you, with all that information you just threw out there, August top, first of all, is that across the board? Will that include Bitcoin, et cetera, for this bull run for the top, or will it just be strictly on Wall Street?
Yeah, I should have clarified. It's the market index top.
Okay.
So, you can have the indexes topping, and you can have energy skyrocketing, Bitcoin skyrocketing, gold and silver skyrocketing. I'm just talking about the thing that people, when they turn on the news, that's the number they see. They see the S&P 500, the Dow, the NASDAQ. So we're looking for a blow-off top in there to end either August or like October area, November maybe. And we can get both. We can have a top in August, and then Trump gets in. We get a relief rally after the election, just like the last time he got elected, and roll over after that. But it's going to be really volatile. And as you know, Dave, we have a great way to kind of avoid that volatility, and it's those yield max products I talked with you guys about last month. And I'm telling you guys, game changer. I sent Dave a bunch of attaboys. People made a lot of money in the month of between our calls in June and July. And also I did a podcast, and one of my customers actually transcribed it. I guess there's auto transcribe features out there. If you can't find it, come to my podcast at Trade Genius. We'll be happy to post it out there for you guys.
Yeah, because again, tradewith2030.com. Now, that PDF is a very special show in itself, talking about, okay, all these geopolitical things are changing. All right, so Mexico might go down, parts of Asia might decrease with new tariffs. All right, so that's just what you see on the surface, on the chessboard. That's what they want you to see, the public displays of this is going down, that go. But the wealthy always have a certain way to, like you say, with these yield max products, it doesn't really matter if you can already kind of target the area on the planet that might decrease. I mean, that's all they do, is they look at this volatility and they see, do you think anticipating going down? I mean, walk me through these yield max products here, because you already see there's an enormous amount of change, and it's going to continue to. But how do these generational wealth investors continue to hold their wealth and accrue it and increase it during these times of change? That's the whole thing to get at, is it's here. So how do we protect, and how do we thrive, and how do we benefit from this?
Yeah, so there's two schools of thought when you're wealthy, right? You hunker down and you just buy bonds, and then you capture the yield, and you capture the price appreciation. We're going to do that too. But then there's the other approach where you can hedge your portfolio by going long and short And in the past, you're really hedging yourself into just like neutrality. But there's a third way with the way you could do these products, and they're really called high yield because they create synthetic long positions and synthetic short position. In the past, you'd have to have a lot of money and you'd have to have active management, and it's institutional. But they changed the rules last year and allowed retail to get part of this. An enterprising company called Yieldmax decided to create like 26, 28 of these products that are really focused on these high yields with on the underlying, like Tesla and Apple and Disney and ExxonMobil, and then basically the Bitcoin complex, right? You got MicroStrategy, Square, Coinbase, BITO. And so what we did with this was we created 3 strategies. One is a strategy around Bitcoin because we believe Bitcoin blow off is coming. And when I mean blow off, over 100K. So we're in those yield max products that are focused on that. We're talking about, it's called Misty, it's called Coney, it's called YBit, and so that's the strategy we do, and then we tweak our sizing on that for our clients. Like, hey, how aggressive you want to be? But these guys are paying 80 to 90% annualized yields, okay? And over the course of the year, even if the principal of that ETF went down, the dividends are overwhelming it. And so they're net really good, better than you can do in the markets. The other strategy we have is basically sector rotation. If you think energy is going to go up, you can buy ExxonMobil. If you think, consumer products are going to go up, you can buy that sector. Tech, you can buy that sector. And there's different stocks in there that we go in and out of. But the third one is the one that I am most excited about. You can actually go long and short. Right now, there's 3 products that are available, and they'll come up with a total of 6. So you can go long and short right now, Tesla. You can go long and short Coinbase, long or short NVIDIA. And they have a long product and a short product. Both these are paying dividends of 40 to 50% plus dividends. At the same time, you're basically washing out the principal risk by going long and going short. And then what we've done is applied our algorithm to bias it 70-30, 30-70, 50-50. Or in the case of Coinbase, Coney, we're 100% right now. Tesla, we're 70-30. And then when you get to NVIDIA, when that product comes out Wednesday, we'll go 70-30 on that as well. We've been 100% the NVIDIA product. And these products are paying out, like I said, 60 to 90%. You hedge it, you're 40 to 50%, and you get your principal risk down, wiggling it in a 10% range. If I told you, hey, Dave, your max loss could be maybe 10 or 15% on your principal, but you're going to be rolling 40 to 60% dividend yields every year, you'd be like, sign me up, coach. And that's what we do. And we help people manage that through our algorithm using those products. And then, of course, it's up to you what you want to take the trades or not, because we're just a signaling service. We're not going to manage your money for you. We don't know your risk tolerances. But, last month I have $216,000 of these products in my portfolio, and I generated $13,000 in dividends last month. Not too shabby.
I think we could live on that. I know a lot of people could live on 13K a month. And again, that would give you time to, do other things or follow passions or, build your other business that's your main driver of income.
Yeah, and you don't have to watch it every second. Just so you know, if you wanted to get the normal yield on that, you'd have to have your portfolio have to be over $1 million. And like previously, half of it is in IRAs for me. The other half is I use to live on, and about a third of that I'm hedged. So and then 2/3 of it I'm basically directional with the Bitcoin trade. So, but I'll eventually, by the time we get to the end of the year, I'll have that entire portfolio hedged with pair trades. And then you're exactly right. The reason why people like this, and we'll help you do it, just you get access to the system if you sign up. We did a price increase on our side. We didn't do a price increase on your side. So we kept it for your listeners, Dave. So arbitrage us and go to his site and sign up.
Trade with 2030.com. I'll put the link right there.
I'm telling you, it's gonna be awesome. You don't have to fear the bear. So so for me, going into this market sell-off that I'm totally expecting, is I'll have TLT, I'll have these pair trades on. You'll be able to hedge Kathy Woods' stuff, in the ARC, and then you can have dividend yielding products, and then the market can go absolutely insane. You won't care, and you'll be able to generate enough money here to live on if you have already the capital, available. But I'm telling you, the smallest yield is ExxonMobil at 20%. The highest yield is 120%. It's these NVIDIA products. So, and then they have one that just manages them by average, and that's 45%. And that's the one I put my daughter in. So they have one it does a combo of all of them together, and just set and forget it. I'll look at it 10 years from now.
Yeah, so let me ask you a sector, NVIDIA, the largest cyber event in the world has ever seen. So who are the winners and losers out of this sector? Like you talk about the sector specific. So what do you think repercussions, and where is this going to move us to in terms of a lot of shifting going to be happening right now?
It's hard to say because everybody's connected to the same pipe, right? So
Yeah,
if they
that's
can
the
take the
problem.
pipe down, we're kind of screwed. Even Bitcoin won't be able to avoid that unless you want to walk around with QR codes with you. So they're gonna have to really look to strengthen that thing. The CrowdStrike one, if you want to believe the surface answer was a bad driver, but I don't buy it because that driver was probably thoroughly tested. Actor came in there and manipulated as it went out the door, just like we did with the Iranian centrifuges. You got right into the machine. So I think you're going to see more AI monitoring coming up. I don't know if you watch your credit card companies; they kind of know your history, and if you do something absolutely a little bit out of bounds, contact you. They know if you're traveling, even if you don't use their credit card to buy a ticket. They know you're out of the country. You get a notification. Hey, we know you're not in the country. So you're going to see more and more of that stuff. I don't know how that reflects, but I'll tell you, there's a company called Palantir, predictive modeling company that probably going to do really well over time. It won't be economically sensitive. And then, like I said, I think the hard assets are going to do well, especially the currency assets. So, and then I consider energy a currency asset because it is so big, so liquid, so required so basically energy, Bitcoin will do well, and then you need to hedge it with bonds and these pair trades. And that's how I'm going to be looking to attack 2025, Dave.
Yeah, I want to add one point there. The talk yesterday was BitLocker encryption keys are required to go into each server to unlock that, to decrypt it, so then these manual updates can be pushed. But as of yesterday, what they were finding was companies were having trouble finding these encryption keys because after the changeover of staff of so many years and times during COVID that, we never had any magnitude event like this. So it just, some of them were just lost in the dusty locker over there on top of the desk. But, they were talking like 3,000 servers. Some of these very large companies running 3,000 to 5,000 servers, and they were trying to get in. They can't find the keys, but it required a key for each server. So this is another thing to look at. This is a prolonged event where it's not going to be done just tomorrow, because some of these companies really can't come back online right now because they can't find their encryption keys. Which rolls us right back into the whole decentralization, talk. So, I mean, this is an octopus that's interlooping on itself like 8 DNA strands or 4 DNA strands of 8 octopus arms. It's just insane. And Palantir with Peter Thiel from PayPal, who was JD Vance's mentor, is now going to be the vice president. As you can see how those companies could get some preferential treatment also on the predictive modeling. So away we go, I think.
Yeah, well, I think the politics are suggesting decentralization too, because remember, the left represents centralization of power, the right represents decentralization of power, in the broadest sense. And you're seeing Europe starting to shift hard right. I think our country will be shifting more to the right, and because the left policies always result in calamity. I just hope it doesn't take us 100 years like Argentina to realize what a mistake they made. So I think you're starting to see that. And then you have to make yourself anti-fragile too. So to the extent that you can, you don't want to be in a situation where, you need cash, you don't have it, you can't barter, you don't have a skill, you're living in a dangerous place. some of the stuff's going to be painful. You're going to have to make decisions you may not already want to make in terms of your job and your job location and your personal location and your activities, yada, yada, yada. And I think all that's going to be happening here over the next 5 to 10 years. And once we get to deep into a recession, recession too, you're not going to hear it. They can show nominal GDP going up, but the cost of living is going to outpace it. To me, that's a recession. And so, we're kind of there now. And I think once it really bites next year, I just showed a thing with credit card delinquencies are just like out of style, just straight up, just crazy. Come trade with us, guys.
Oh, I hear an alert. Trade with
money.
2030.com. That means go to the site, check it out. Every time you hear that sound, scary good is an understatement. Until next month, I appreciate everybody watching. Remember, as always, I do read the comments as you put them here for our conversation. So I take some of those comments and then turn those into questions for Bob, the next month. So thank you for joining. Consider joining us every single month. We always try to look at the general trend going out versus specifics on a specific day, but we're pretty good at nailing the trend through either the month or the quarter or the year. And that's what it's all about, is just getting positioned to protect yourself. Remember, that's trade with 2030.com or.
Hey, but next month should be a really interesting month. So either the market has topped or we're going to blow up into the election. So how's that for an easy out for me?
Oh, easy. We're looking for puppy cameos. We both got dogs under the desks right now. But anyway, that didn't happen. Next month is possible. Thanks for watching. Bye for now.